Okay, sorry about this, I'm adjusting this. Hey guys, this is the East Coast Economic Update for October the 15th, 2009. We've got a few very interesting items I want you to keep an eye out. I've been watching CIT. Of course, everything's going to be in the info box. CIT, just to let you guys know, controls 90% of the financing for any business, any retail business that's smaller than Walmart. In other words, everybody who has a retail business except for Walmart gets their financing from CIT. Now, CIT took a major hit and got $2 billion from the government in the beginning of January of 2009. And then the government decided that they were not big enough to save. The problem is that unlike Goldman Sachs and the rest of them, these guys actually keep guys like me and other folks that do retail businesses in business. Now, what caused CIT really to collapse was not CDOs and whatever, primarily. It was one company. It was the second largest retailer of consumer electronics, which was not Best Buy, Circuit City. When Circuit City, got more financing from them and then closed its doors January 1st, which CIT lost a lot of its money to bankruptcy. Now, here's the thing. If CIT no longer exists or its entities are not taken over, I can guarantee you, without a shadow of a doubt, that about 80 to 90% of your middle to lower end retailers are going to be gone. So keep a close eye on them. I'll leave the Bloomberg article over there, and also its stock, which is now sitting around, I think, 75 cents. From its highs of $30 a share. Next, just like the weather moves from the West Coast to the East Coast, New York is running out of money. Well, ladies and gentlemen, here on the East Coast, on the East Coast Economic Update, I can honestly tell you not only is the weather bad here physically, with torrential downpours and wind chills of near 34 degrees, but Governor Patterson, our esteemed governor here in the state of New York, has announced that we will be out of money by the end of probably November, and we already have a shortfall of over $2 billion. Sound familiar? It's exactly the amount that Governor Schwarzenegger said that they were short last year. So troubles are coming our way, or have arrived from the West Coast. Thanks for the weather, guys. There was a few other items of minor note. I just want to point one thing out. The dollar is going down, the gold is going up. The last time these two things happened, oil reached $100 a barrel. Now, a lot of people will argue that they were speculators and what have you, but it's very interesting. There's a definite correlation between the drop of the dollar in April 2008 and the rise of oil past $100 a barrel. Funny enough, when oil did drop down to $30 a barrel, oil was around 89, 87 bips or cents for the dollar. So there is a direct correlation. Do not be surprised that we will have $4 gasoline and incredibly high oil prices here in the Northeast especially. Funny enough, it is going to be a bad cold winter, both financially and also physically here. At least I can speak for the East Coast. I know you guys in the Midwest have probably, I know you guys have gotten severe snows in the Midwest, but I think we're all going to be in store for a very cold winter, and just in time for the oil delivery guys to jack your prices up. So be aware of that. Somebody had asked me what might happen, what will happen when the dollar crashes, and I had basically said, and this is just a intellectual guess, unless Ben Bernanke starts raising interest rates as quickly as he dropped them last year, if not faster, we will see a drop an initial drop in the Dow Industrial Averages because of lack of confidence in the dollar. But once we start to hit into hyperinflation, since a dollar will get you less, the stock market will also rise just on valuation, in the sense of valuation of the dollar, not valuation of the quality of the company. The companies can do horribly, and they can ratchet down, in price. But if you have hyperinflation rising twice the speed in which a company's worth is dropping, eventually there's going to be a lift. And don't be surprised to see, probably by middle of next year, Dow 15,000, Dow 17,000, or 20,000 if this hyperinflation goes unchecked. Now, there's a lot of arguments about deflation, inflation, stagflation. The answer really is no one really knows, because we don't know what people are going to do to react. Bernanke could raise the interest rates to 20%, and then will place us in a deflationary situation, but at least the money that we're holding on to, the dollars that people have in their banks and so forth, will be worth more. Now, that will put pressure down on the gold price, because when you raise interest rates and the bonds start to reflect that, the gold and oil prices will drop. Now, of course, if gold and oil starts to be counted in euros, this little change will mean nothing, and gold and oil will keep rising against the dollar ultimately. So we don't know. My guess is, to be honest with you, to be a tactician about it, Mr. Bernanke doesn't have, as they say here in Brooklyn, the balls to do it, because he's too afraid to do exactly what the people in the Fed did in 1929, 1930, which is, restrict the money supply and raise interest rates to prevent such a thing from happening. And since he has his PhD on the line here and his theory, my guess is, and it's a damn good one, that he's not going to do it, to prove a point that he's not only wrong, but he's dead wrong. So just want to let you know, all the, with exception of you, Colleen and Andy, and you know who you are, I've sent out all the signed letters for the vaccination exemption, and I want to thank everyone who has loaded my previous video to their sites, and I appreciate that. I'm hoping that it'll work out for everyone. And if I haven't gotten if I haven't emailed you the exemption, go on my website, my email address, which is here, and just tell me, and I will shoot it out to you tonight. One other thing, there seems to be a correlation here with, amongst other things, the Reinhardt Group, and that's all I'm going to say for now, that October the 19th is going to be the beginning, and the WebBot October the 25th is going to be its crescendo as far as the markets are concerned. What does that look like? I have no idea. But there's really good evidence between Gerald Celente, the WebBots, and now Reinhardt and associated Reinhardt type groups that we're having that this thing is going to start probably around the 19th, and the realization is going to come to, at least for us, on the 25th and forward. Now, I want to leave one other thought, and this is what I'm going to probably cover in next month's newsletter that we have on UTOM, and this is the concern I have with the WebBot's prediction of a Hamagito, or as you say in Latin, Armageddon situation in the Middle East. My fear is, and I will go into more detail in my article, that the Jewish people, that Israel is going to be used in a pawn to get the distraction from this huge debacle that is going to befall the Obama administration in the next few weeks. And my biggest fear is that people like myself, I don't consider myself a Zionist, whatever that may mean, because it means so many different things to so many different people. I'm afraid that the Jewish people, that's my weather bug telling me there's a coastal study, the Jewish people are going to be blamed for a basically Middle Eastern war. And if it goes badly, which the WebBots state that it might, the repercussions of that in the level of anti-Semitism may occur. So I will go into more detail about that. Keep your prayers and hopes, and Keep your eyes to the skies, guys. Peace.